In the early 1990s, India was going through a financial transformation. The stock market was booming, and one man, Harshad Mehta, became its undisputed king. A stockbroker from Mumbai, Mehta was known for his sharp mind, lavish lifestyle, and ability to move markets with ease. But behind his success lay one of the biggest financial scams in India's history. Mehta discovered loopholes in the banking system that allowed him to manipulate the stock market. At the time, banks were not allowed to invest in the stock market directly. However, they could lend money to each other using a system called Ready Forward (RF) transactions, similar to short term loans. These transactions required government securities as collateral. Mehta exploited this system by using fake bank receipts, essentially IOUs, issued by small banks. These receipts falsely showed that government securities were being traded when, in reality, no securities existed. Mehta then used these fake receipts to get huge loans from larger banks like the State Bank of India. Instead of using the funds for banking transactions, he pumped the money into the stock market, artificially inflating share prices, especially those of companies like ACC, Sterlite, and Videocon. As stock prices skyrocketed, retail investors followed suit, investing in what they believed was a thriving market. Mehta became a celebrity, often appearing on television, boasting about his stock market strategies. People called him the Big Bull because he kept pushing stock prices higher. But all bubbles eventually burst. In April 1992, journalist Sucheta Dalal from the Times of India exposed the scam, revealing how Mehta had used fake bank receipts to siphon over 3,500 crore, equivalent to billions today, from the banking system. When banks realized they had been tricked, they demanded their money back. But Mehta couldn't return the funds. Most of it was tied up in overvalued stocks. Panic set in. The stock market crashed, wiping out billions of rupees in investor wealth. Many middle-class investors who had trusted Mehta lost their life savings overnight. The fallout was massive. The Securities and Exchange Board of India, SCB, introduced new rules to regulate stock market transactions. Banks became more cautious, and stricter financial laws were put in place to prevent such scams in the future. Mehta was arrested and faced multiple legal battles. Though he maintained that he had only exploited loopholes in an unregulated system, he was convicted of fraud. In 2001, at the age of 47, he passed away in prison due to a heart attack. His story remains one of greed, ambition, and the consequences of unchecked financial power. It also changed India's financial landscape forever, making markets more transparent and better regulated.